This is Eric Mwale, Mwale.com, with another installment in the Swedge breakout series. This is the momentum Swedge breakout. It's not really a new idea. It's just emphasizing the fact that when you're out there looking for new stocks to trade, stocks on the rebound, or even stocks making new highs, one of the reasons why you should always look for stocks with momentum is because this is where you're going to find the best Swedge breakouts, because the stocks with high momentum are going to be trading in the with their daily RSIs typically above the 50 level area, which makes them ideal Swedge breakout candidates. So when you're out there looking for rebound stocks, for stocks to put on your watch list, try and find stocks that have recently made new highs so you can track them, because when they pull back, some of them might not be finished with their rallies and the run might not be over, which means that we might be getting daily Swedge breakouts along the way for relatively low risk entry points whenever there is a Swedge breakout. And because a Swedge breakout is really a measure of change in sentiment over a period of time, these typically tend to be very clean entry points. So what we are looking at is usually on a daily, and one of the reasons why you want momentum stock, because when you're drawing, you've drawn the lines for your Swedge formation, if it's a breakout stock, you want this to be a significant high, a 52-week high, preferably if you're looking at a daily chart. You want this to be a significant high, so that when this breakout takes place on the daily, and preferably you want this to take place above the 50 level on the RSI, because the mathematics, forget about the stock market, forget about news, forget about CNBC, Jim Cramer, forget about everything. The mathematics that define the RSI dictate that when the stock is above 50, the mathematics, the average performance of the stock will tend to be positive. Alright? And when it's below 50, the mathematics, the average, dictates that there is pressure on the downside. So really, stock market success depends on you placing your capital where there is highest level and the highest odds for success. The odds should always be stacked to your favor. Okay? And if you really want to be in the best place in the market, put your money where you're getting clean, well-defined breakouts and the RSI is above 50. Now don't get tired of me saying this, because this, I can guarantee you, is where you're going to be making money. And if you're frustrated, it's because you're not doing that, my friend. Alright? Cool. Are we together? On the flip side, if you are trying to short a stock, you want to make sure the RSI is the same formation. Okay? Make sure this, where your RSI line is based on a strong low, preferably a 52-week low, which means that this trend line is significant to the stock. And when this trend is broken, that means the stock has become weak and the bears are winning, and more than likely the stock is going to be pressured lower. Preferably also, you want this stock to be moving above, just below 50 for the first time in many weeks, months, and days. So this should always be fresh move below 50, a fresh change in sentiment, and then taking us to an area where the mathematics dictate that the stock is going to be under tremendous pressure. I have one example in this installment, and that is JRCC. Now, I don't know how in the world I missed this stock in 2008. I'm even ashamed to put it out here as an example. Man, this thing moved from, if I take this, from around 10 all the way to 60, and I just watched it. Don't ask me how that happened. In the stock market, you watch so many things, and sometimes the easiest trades just you miss them. I am guilty. At any rate, you can do better than me. I did not lead my troops to the right stocks in 2008, especially as far as this example is concerned. It is what it is. So let's move on. Why this stock did good? You're gonna, every wedge formation above the 50. Now here's a wedge for breakout below the 50. Notice the stock moved from 5. Well, it wasn't really a bad move. From 5 to 10. That's not bad, really. I can take that any day. But the best moves began when the stock started making these short-term daily wedge breakouts above 50, like in this instance. Another wedge breakout here above 50, moving the nice move after the breakout here. And then there was another great breakout. And whenever you find such breakouts on the daily or on the hourly, now let me pan this a little bit higher. Now you see this wedge with the green top lines here, right there. Right there. Now that moved the stock from, broke the stock to new highs from 25 all the way to 60 in a short period of time, because this was a very strong wedge breakout when the stock was way above 68. These are very strong moves. Whenever you see that, this tells you that the momentum is so strong. The stock was already oversold, and now you have fresh, brand new momentum breakout psychology. So watch out for stuff like that. So let me see whether there's and then again, when we lost this momentum, you can see is when we broke this trend line, the red line right here. When we broke that is when we dropped from around 55, and we've never really gotten back to those levels since then. And using the cheat code method, if I draw a wedge, if I use this red line as my guidance on the lows, I can form a wedge top lines right there. So we have this wedge, and the way to cheat is to draw a line from these lows right here, touching those intermediate lows for the stock, and so your initial exit point is somewhere around there, which is really way in the 60s. So the cheat code does help you get out of stocks. Actually, it's good for exits, I think, more than it is for entry points. And again, we see another cheat code, because right now the stock formed this black line here, the wedge, fresh wedge formation right here. It's below 50, and we know that the ultimate breakout is going to come when the stock maybe breaks out of this wedge type pattern later on. But for now, this entry point was a high risk entry point, but it was also profitable, because it did actually move the stock from, I would say, 34, 33 area all the way to as high as just slightly above 45. That's not bad in about 5 days. Really good move. Other than that, that's all for this installment. Watch out for momentum stocks, because there's a reason why they keep running. There's something fundamental. There's a reason why they're moving. Money is probably following the sector. A lot of hot money, big institutions trying to follow the hot stocks, the hot sector. So that's why they keep bearing fruit longer than we could think they could run. And you can use a wedge breakout to actually find your way into the stock, knowing exactly what you're doing. ERIC. Peace and blessings to you.